I want to talk about yesterday's entry. This was price coming in to the market close. This line represents a major pivot that I figured since we swept the pivot, I was not necessarily anticipating that we go too much lower, if at all. Now, here's where I think I made a mistake. I also had this fair value gap marked off, and there's another fair value gap even lower. So I'm thinking, I literally thought after I entered the position, kind of went away from my desk, that I should be mindful of this gap. Now, I think the issue here was the stop required in this area, range, whatever, was pretty big. And I think I would have been better suited managing my entry to reduce some of the size. Like the size didn't need to be as big as it was because I got stopped out down here. When in retrospect, I could have had a limit order here that very well still could have gotten stopped out, but I would have been better positioned limit order entering here as opposed to market order entering here, because I thought as soon as I saw this 3 p.m. open, I thought this level needs to be retested. And pause, because I've had that thought many times. This level needs to be retested before we continue. And it was retested. So it is possible that this level becomes the protected low. We don't know. We never know. And we're not supposed to know. And that's fine. But the correction I want to make is I want us to try and, for our liquidity trades, I want us to look for areas to limit order in and better manage our risk to reward. Because in this case, I took the trade with an RR that was twice as high. And then I also tried to protect with a trade in the opposite direction, which resulted in actually a 3x. And that's not what we want, right? That literally does not work. So if we can't get a 1x, which is basically $250 to $300, we need to ask ourselves, I mean, I don't even want to say it this way because I'm trying to fit it into a box, but realistically, if we, in this case, we saw this entry, there's no reason to market order into this. If it leaves us, it leaves us, especially if we market order and our risk or the place where we think the trade is invalid, in this case, it wasn't, is too expensive. We would have been better off in this situation making that more robust trading plan. So we talked about this yesterday. So if I would have made a trading plan to say, if I market enter here, what happens? I would have said, well, the risk is $500 and I should have said, and I might write this down somewhere to say, there's a better place to enter that offers you a better risk to reward, and it's in the fair value gap that is lower. How can we enter there? Now keep in mind, there's a gap underneath that as well. And if we lose these two gaps, then it's lights out for price for the time being. So I think just to kind of think about or talk about the impact of the error, without thinking about it, because I get kind of excited to enter as opposed to stopping and thinking, okay, what is the trade plan? What is our risk management? How much does it cost us to be wrong? We don't need, like, in these instances, we're getting a 4R, right? So a bet of 250 that is effectively placed can still net you $1,000 or more. So it doesn't require you're not going to miss anything, especially when entering in the Asia or London sessions that move, pretty slow. So that's it. This is an important one though, so I don't want to overlook it. I don't want to miss it, so to speak. But there's no penalty, right? We're not penalizing ourselves. You're just thinking like, okay, no problem. There's definitely an opportunity here still to get long. My bias still remains the same. It's just my entry could have used some work. In this case, we need to be looking at where is the optimal entry, as opposed to feeling like we might miss the move. The move is rarely ever missed, especially when we're talking about entering during the Asia or London session.